Good evening, everyone. My name is Paul Young. I'm going to walk you through the market trends for December 2015. The first slide you're seeing here is just to look at the trends of the stock market, the TSX, to kind of look at where the peaks and valleys have been since 1995 to 2015. As you can see, is in 2015 we started pretty good in terms of the overall market valuations, but the last 3, 4, probably 5 months we've seen a purely drop in the markets. A lot of that's driven by the oil pricing and uncertainty between oil and the commodity prices. Now, the other area that's going to come into play too as well is going to be the currency rates. The currency rates themselves, basically for the Canadian dollar, which is critical because that makes our imports that much more expensive. So what you have to watch here is since 2014, the Canadian dollar has actually lost 20%. Now, people should need to understand quickly, the Canadian dollar is driven this valuation by commodity prices. Since commodity prices are significantly down, it only makes sense that those areas are going to drive that dollar down. Second point here, when you start bringing in imports from other countries, the Canadian dollar makes those imports more expensive, so that as you're paying for things at the retail store or food, you're going to see those prices. Consumer Price Index, the CPI, this really measures the core inflations. From basically the latest report shows that the CPI index is down across most segments, with the exception of one, which is let me rephrase it. It's up in most segments, like food and shelter being the big drivers of that, which makes sense because we saw the hike in the Canadian dollar, so we're seeing prices from that price being passed on to the consumers. The only sector that seems to be benefiting is transportation, which makes sense because we're seeing lower prices from gas. That's why that comes into play. So the overall cost of inflation is 1.6%. Canadian employment is another area that doesn't get a lot of attention. It gets a lot of rhetoric and smear from governments like the Liberal Party, Ontario's government like Kathleen Wynne, or even Notley out in Alberta. It doesn't get a lot of attention. Last year, despite all the uncertainties that hadn't happened in provinces like Alberta, Saskatchewan with the job losses due to the oil sector, we've seen a pretty good clip of job creation last year. We saw 208,000 new jobs created. That's net new jobs that came into the economy that contribute to income tax. What it's also not telling you in general is 95% of those jobs were full-time. So despite what the rhetoric of the Liberal government is saying, they haven't kicked any policies in to this point that would impact the employment numbers. Exports. This is another critical area that you need to understand. Yes, the energy is still a significant segment, but the main drivers here of last year that drove exports up, or at least kept it relatively flat or just down marginally, were forestry, motor vehicles, consumer goods, and food. That's significant. Those are key areas that have showed that they've helped close that gap where energy hasn't performed. But the reason why maybe those sectors haven't done as well is because we've lost capacity. We've lost the ability to expand exports. Exports should be about 25% higher if we had the capacity. And that's an area that when I get into government policies that I'll highlight. Let's talk Canadian manufacturing sales. Again, they tie directly into the exports, with the key sectors being transportation, food, manufacturing, and forestry. Housing starts. Our housing starts on average are up from the previous year. We had a slow period in December, but that's weather driven. But really what you want to take out of this slide is you want to look at the U.S. The U.S. is basically gained 25 to 30% more housing starts, so the housing market in the U.S. is starting to rebound to a very up cycle. Now, some of the issues that come into play that you need to be careful here quickly is that Canada has a softwood lumber agreement that's about to expire this year. That has to be renegotiated. That will impact forestry sales. Let's talk retail sales quickly. Retail sales are up 1.7% from October 2015, but all sectors are up with the exception of gasoline. Now, the key thing you need to be careful here is some of the big ticket items like automotive sales were up and had a banner year in 2015. Now, issues facing Canada as we move forward is we're in a period of low commodity prices. No matter how you dice and slice the information, there's no rebound in sight for commodity prices. Two, we're also in a period of low Canadian dollar, which is going to impact imports. Makes our exports a little bit more expensive, so it's going to have that. We're also in a period of global growth that's slower. 3% globally for 2016, 3.6% 2017. That's slow growth. And Canada basically is an export-driven country, therefore it's going to see slower growth. Now, we've got things in play that are uncertain too as well that's going to impact the markets. One is we have a new government in power. This government is clear on its agenda. Its agenda is focused on high tech, Agenda 21, which is clean energy, and infrastructure. Now the key thing is here, infrastructure is a critical aspect to drive exports, but if decisions aren't made properly in infrastructure, it'll actually do more harm than good. The second point is we got provincial governments that are running deficits and debt levels very high. Either they're going to cut services or are going to have to raise taxes through carbon taxes, ORPP, or hike corporation tax or user fees. So we're in an area now where we've got unclear government direction on policies, and that can impact the markets too. This was a quick presentation to kind of give you an understanding of the markets, pressures, where the upsides of the business cycles are. Thank you.